on this episode, the foundation, and I do want to say, we do this, the foundation, the vault for sure. I can speak for those two shows are for charity. This is what we do to give back. This is what we do to help educate and assist our brothers and sisters to get to a better position to where they're controlling more of their finances and therefore controlling more of their, financial freedom and their wealth, which translates to, in a lot of things, stress levels, lowered stress levels, heightened excitement levels, because maybe you can do more with this finance, not only for yourself, but, with regards to charitable or donation type movements. We have more control of, how that money's being spent and where it's being allocated and stuff. So, the foundation for sure, we're, and I specifically, so L, am looking to lay a foundation with regards to the commercial realm and how it operates and how to operate. We've all been operating in commerce since you got a driver's license, a permit, since you bought your first item, whether you got that money for allowance for doing chores or it was just a gift given to you by a relative or some friend, or it doesn't matter. We have all been in commerce for a long time, and I know that a lot of us, me included, don't or did not know how to operate properly in commerce because we don't understand that what we do is commerce. From a lease that you sign for your apartment to the car, paperwork to buy a car, to every transaction that you make, from a grocery store to an oil change to getting gas, regardless of what it is, buying clothes, doesn't matter. It's all been brought into the commercial realm. Food, clothing, and shelter, the necessities of life with regards to humans, as well as, a lot of animals, have all been pulled into commerce. Your food, your clothing, and shelter is predominantly obtained through commercial transactions and commercial means. So with that being said, this is the reason for, this show, particularly the foundation. What we're doing right now is I'm going through Commerciavelli series, which is, in my opinion, the basic principles that we feel over here at High Frequency Radio Network need to be ascertained on the base level before it is, recommended higher, more specific commercial activities are undertaken. As being, maybe secure party process, negotiable instruments, international bills of exchange, so on and so forth. And with that being said, this Commerciavelli series is personal versus corporate liabilities, and we're going to go through that. But specifically, and I know it might be not correlated, but I want to explain, a corporate liability, most corporate liabilities, all corporate liabilities really end up translating to expenses. So with that being said, just like last week, I'm going to go through an Internal Revenue Service publication, this publication being publication 535 with regards to business expenses. This is the publication for use in preparing 2016 returns. This is the most up-to-date publication. So this is business expenses. Now, business expenses, which would translate to corporate liabilities, are ultimately expenses and liabilities required in the normal transaction, day-to-day functioning of a business. This would include, of many things that we're going to go over in this publication, employees' pay. That would include executives' pay, also employee pay, W-2, as well as 1099, contractor pay. Rent expenses, interest, taxes, insurance. It goes over amortization, depletion, business bad debts, and other expenses. I'm not technically going to go through this entire publication because I might not have enough time, and I want to leave time for discussion as well as, question and answer if, we have enough time to do that. But I'm just going to start with the introduction, because why not? The topics go over what you can deduct, how much you can deduct, when you can deduct, and not-for-profit activities. It also lists useful items, which includes publications with regards to tax guides for small business, travel and entertainment, gift, car expenses, taxable, non-taxable income, net operating losses, accounting periods and methods, corporation and casualties, business use for your home and passive activity, and at-risk rules. There's also a publication with regards to how to depreciate property. That's publication 946. Anyone who has a business and that business has assets, I highly recommend that you look at this publication. They also cite Form 1040, Schedule A, for itemized deductions. And obviously that would be for anything for an individual tax return. So what can be deducted? To be deductible, a business expense must be both ordinary and necessary. So it must be with regards to the ordinary conduct of the business and necessary for the business. An ordinary expense is one that is common and accepted in your industry. A necessary expense is one that is helpful and appropriate for your trade or business. So, it's appropriate for your trade or business. An expense does not have to be indispensable to be considered necessary. Even though an expense may be ordinary and necessary, you may not be allowed to deduct the expense the year you paid or incurred it. In some cases, you may not be allowed to deduct the expense at all. Therefore, it is important to distinguish usual business expenses from expenses that include the following: the expenses used for or to figure cost of goods sold, capital expenses, and personal expenses. And that's why this is personal versus corporate liabilities. Liabilities we understand now to be expenses, anything that takes money out of your pocket or the pocket of your business or the pocket of your trust or the pocket of your foundation or what have you. So it's going to go over these things. So the cost of goods sold. If your business manufactures products or purchases them for resale, you generally must value inventory at the beginning and end of each tax year to determine your cost of goods sold. Excuse me. Some of your business expenses may be included in figuring cost of goods sold. Cost of goods sold is deducted from your gross receipts to figure your gross profit for the year. Gross receipts would be all of the money that the corporation took in that year, not subtracting expenses. That's gross. Minus expenses is net. If you include an expense in the cost of goods sold, you cannot deduct it again as a business expense. All right? So the following are types of expenses that go into figuring cost of goods sold: the cost of products or raw materials, including freight, storage, and direct labor, including including contributions to pension or annuity plans for workers who produce the products, as well as factory overhead. So, cost of goods sold. Under the uniform capitalization rules, you must capitalize the direct cost and part of the indirect cost for certain production or resale activities. Indirect costs include rent, interest, taxes, storage, purchasing, processing, repackaging, handling, and administrative costs. So administrative costs fall under there as well. This rule does not apply to personal property you acquire for resale if you average an annual gross receipts for the preceding 3 tax years are not more than $10 million. Cost of goods sold, you can check out, we're going to check it out in Chapter 6 of the publication, as well as you can check out publication 334 to go into that more. So capital expenses, let's go into capital expenses. You must capitalize rather than deduct some costs. Okay? These costs are a part of your investment in your business are called capital expenses. Capital expenses are considered assets in your business. In general, you capitalize three types of costs: business startup costs, business assets, and improvements. So cost recovery. Although you generally cannot take current deductions for capital expense, you may be able to recover the amount you spend through depreciation. We're going to go through depreciation later a little bit, but it's, depreciation, especially with assets or corporate property, is really, really dope. And there's attorneys who specialize in appreciation and depreciation. Excuse me. These recovery methods allow you to deduct part of the cost each year. In this way, you are able to recover your capital expense. Going into business, the costs of getting started in business before you actually begin business operations are capital expenses. These costs may include expenses for advertising, travel, or wages for training employees. If you go into business, when you go into business, treat all costs you had to get your business started as capital expenses. Okay, so everything from incorporating the business to a mailbox or an address or getting a suite to accept mail, all those costs that are to be included as an expense with the business is a capital expense. Usually you recover costs for particular assets through depreciation. Generally, you cannot recover other costs until you sell the business or otherwise go out of business. However, you can choose to amortize certain costs for setting up your business. See Starting a Business in Chapter 8. So Starting a Business, that's its own publication. If your attempt to go into business is unsuccessful, okay, so if your attempt to go into business, if it doesn't work, and you don't make any money, if you are an individual and your attempt to go into business is not successful, the expenses you had in trying to establish yourself in business fall into two categories. The costs you had before making a decision to acquire or begin a specific business. These costs are personal. See, it's a personal liability. They include any costs incurred during any general search for preliminary investigation of a business or investment possibility. And then two, the costs you had in your attempt to acquire or begin a specific business. These costs are capital expenses, and you can deduct them as a capital expense or as a capital loss. I'm just going to a capital expense, I just want to go over that, I guess, is an amount spent to acquire or improve a long-term asset, such as equipment or buildings. Usually the cost is recorded in an account classified as property, plant, and equipment. The cost will then be charged to depreciation expense over the useful life of the asset. So there's a predetermined life of, of product or life of asset, and usually that falls under the Internal Revenue Service. Predetermination is in the Internal Revenue Code, and then you depreciate that over the life of the expense. All right, so if you are a corporation and your attempt to go into a new trade or business is not successful, you may be able to deduct all investigatory costs as a loss. The cost of any assets acquired during your unsuccessful attempt to go into business are a part of your business or basis in the assets. You cannot take a deduction for those costs. You will recover the costs of these assets when you dispose of them. So dispose of them, when you sell them, or, have a fire sale. So business assets is next, and we're, if you're just tuning in, we're going over different expenses that can be deducted for a business. And we're going over Internal Revenue Publication 535. So business assets. There are many different kinds of business assets. For example, land, buildings, machinery, furniture, trucks, patents, and franchise rights. Franchise rights would be a business that pays, let's say, $100,000 to have the right to franchise in the name of Subway or McDonald's. A lot of these businesses are franchises and they're owned independently, either by partners or, in a lot of cases, by families, individual families. Certain property you produce for use in your trade or business must be capitalized under Uniform Capitalization Rules. That's a different regulation, section 1.263A-2. So that's the different business assets, see obviously land, buildings, machinery, furniture, trucks, patents, and franchise rights. So these are things that can be deducted. Improvements are another deduction. Improvements are generally major expenditures. Some examples are new electric wiring, a new roof, a new floor, new plumbing, bricking up windows to strengthen a wall, and lighting improvements. Generally, you must capitalize the cost of making improvements to a business asset if the improvements result in a betterment to the unit of property, restore the unit of property, or adapt the unit of property to a new or different use. However, you can currently deduct repairs that keep your property in a normal, efficient operating condition as a business expense. Treat as repairs amounts paid to replace parts of a machine that only keep it in normal operating conditions. So improvements, that would fall under the improvement of any business asset. Look, for example, buildings, machinery, furniture, trucks, as well as, corporate vehicles, patents, and franchise rights. So that would be improvements, which would be a deductible expense, but must be capitalized. So here we're going to go into capital versus deductible expense. To help you distinguish between capital and deductible expenses, different examples are given below. We're going to go into motor vehicles. You usually capitalize the cost of a motor vehicle you can use in your business. You can recover its cost through an annual deductions for depreciation. There are dollar limits on the depreciation you can claim each year on passenger automobiles used in your business. So there's limits on passenger. So, if you have corporate vehicles and they're passenger vehicles like sedans, coupes, so on and so forth, there's deduction limits. This is important. See publication 463 for more information. Generally, repairs you make to your business vehicle are currently deductible. However, amounts you pay to recondition and overhaul a business vehicle are capital expenses and are recovered through depreciation. So, if you're going to add a lift to the truck, or you want to put a plow in the front, or some sort of crane in the back, that would be an overhaul, or considered some sort of reconditioning. Cool. Roads and driveways. The cost of building a private road on your business property and the cost of replacing a gravel driveway with a concrete one are capital expenses you may be able to depreciate. The cost of maintaining a private road on your business property is a deductible expense. So if you got to maintain the road, you can deduct it. Whereas building it is an expense, capital expense. So you get a deduction through capitalization. Tools, okay? So if you got an LLC and you got any tools. Unless the Uniform Capitalization Rules apply, amounts spent for tools used in your business are deductible expenses if the tools have a life expectancy of less than 1 year or their cost is minor. Machinery parts, unless the Uniform Capitalization Rules apply, the cost of replacing short-lived parts of machine to keep it in good working condition but not add to its life is a deductible expense. And then heating equipment, the cost of changing from one heating system to another is a capital expense. I guess if you own if your business owns the property. So amounts spent for tools used in your business are deductible expenses if the tools have a life expectancy of less than 1 year. Well, I don't know how that works. Personal versus business expenses. Generally, you cannot deduct personal living or family expenses. However, if you have an expense for something that is used partly for business and partly for personal purposes, divide the total cost between the business and personal parts. You can deduct the business part. For example, if you borrow money and use 70% of it for business and the other 30% for a family vacation, you generally can deduct 70% of the interest as a business expense. The remaining 30% is personal interest and generally is not deductible. Business use of your home. So it's, the home office of your home for your business. You may be able to deduct expenses for business use of your home. Okay? These expenses may include mortgage interest, insurance, utilities, repairs, and depreciation. To qualify to claim expenses for the business use of your home, you must meet both the following tests. 1, the business part of your home must be used exclusively and regularly for your trade or business. So, specifically with substantiation to that, we move to do the square footage maybe of the part of the home that's being regularly used and substantially used for business purposes. And, figure out the price per first square footage, notate that, and have that readily available. The business part of your home must be your principal place of business or a place where you meet or deal with patients, clients, or customers in the normal course of your trade or business. And C, a separate structure not attached to your home used in connection with your trade or business. Okay? You generally do not have to meet the exclusive use test for the part of your home that you regularly use either for the storage of inventory or product samples or as a daycare facility. So that's for daycare, you're running a daycare. And then I'm going to go into how much we can deduct. Generally, you can deduct the full amount of a business expense if it meets the criteria of ordinary and necessary and is not a capital expense. Recovery of amount deducted, so a tax benefit rule. If you recover part of an expense in the same tax year in which you would have claimed a deduction, reduce your current year expense by the amount of the recovery. If you have a recovery in a later year, include the recovered amount and income in that year. However, if part of the deduction for the expense did not reduce your tax, you do not have to include that part for the recovered amount of income. Basically, you're saying you can't claim it twice. Basically, it's going down. But if it didn't reduce your tax, then you don't have to include that in the recovered amount. So if it reduces the tax, then you got to include that. There's payments in kind if you provide services to pay a business expense. The amount you can deduct is limited to your out-of-pocket expense cost. You cannot deduct the cost of your own labor. So if it would normally cost, if you would charge a normal customer $500 to clean their carpet, you can't deduct $500 from a payment in kind as an expense. You can only deduct the cost of the out-of-pocket costs, so like the shampoo, so on and so forth, but not the labor itself or your own labor. But that's, it sounds like if you have employees, then you can do it from there. I'm going to not-for-profit limits. Let me go to limits and losses. If your deductions for an investment or business activity are more than the income it brings in, you have a loss. There may be limits on how much of the loss you can deduct. So, that's how businesses calculate losses. If they're deducting more than what money they brought in. But it doesn't necessarily mean they're bankrupt or insolvent and they can't pay their bills, which is two different things. Not-for-profit limits. If you carry on your business activity without the intention of making a profit, you cannot use a loss from it to offset other income. Basically, that's for not-for-profit, so that's also dealing with, if you're dealing with a private foundation as well, or any type of private trust that's doing charitable work. Goes into when you can deduct the expenses, but it's specifically, I want to get into, the employees' pay. You can generally deduct the amount you pay your employees for the services they perform. The pay may be in cash, property, or services. It may include wages, salaries, bonuses, commissions, and other non-cash compensation, such as vacation allowances and fringe benefits. We were dealing with fringe benefits. So the corporation deducts that on its own return, usually being an 1120 return. As well as it goes into fringe benefits. It goes into the form of pay of what a fringe benefit is. It goes into the rent. So even if you're doing a home-based business and the corporation or the business is renting or paying a portion of rent or utilities for the part of the home, that's a deduction. The cost of getting a lease is a deduction. Taxes on leased property, rent, the interest is a deduction. Below market loans. And it goes into when you can deduct the interest. I'm not going to go through all this. I'm not going to read for an entire hour. Goes into different type of developmental costs, business startup and organizational costs. You can deduct up to $5,000 of business startup and $5,000 of organizational costs paid or incurred after October 22nd, 2004. So, that's the startup and organizational cost deductions. There's film and television production cost deductions. There are the deductions for advertising, deductions for depletion, deductions for if you have mineral property, goes into that. Deductions for business bad debts. You have a bad debt if you cannot collect money owed to you. A bad debt is either a business bad debt or a non-business bad debt. Okay, so businesses could deduct bad debts. So you either charge off on your credit or whatever. Here we go. Generally, a business bad debt is one that comes from operating your trade or business. Credit card bad debt, consumer bad debt, so on and so forth. You can deduct business bad debts on the Schedule C. All other bad debts are non-business bad debts and are deductible only as short-term capital losses. So this topic discusses the definition of business bad debts, when a debt becomes worthless, how to claim a business bad debt, and recovery of a bad debt. A business bad debt is a loss from the worthlessness of a debt that was either created or acquired in your trade or business or closely related to your trade or business when it became totally worthless. A debt is closely related to your trade or business if your primary motive for incurring the debt is business related. So businesses write off commercial debts. The business can't pay for the corporate credit card or maybe some of the trade lines, but it doesn't completely go bankrupt. These are write-offs. You understand what I'm saying right now? Types of business bad debts. Loans to clients and suppliers. If you loan money to a client, supplier, employee, or distributor. Loan or capital contribution. Debts of an insolvent partner. What else we got in here? And looks like there's one more. I swear there was one more. And debts owed by political parties. The political parties, they write off their They're bad debts. It goes into how to claim a bad debt, the specific charge-off methods, and the non-accrual experience method. So there's methods to charge off, and the foundation. This stuff comes from the private. So, how to charge off a bad debt, recovery of a bad debt, and the specific charge-off methods. So partly worthless debts, significantly modified debts, and totally worthless debts. If you didn't deduct a bad debt on your original return for the year it became worthless, you can file a claim for a credit or refund. If you didn't deduct a bad debt on your original return for the year it became worthless, you can file a claim for a credit or refund. If the bad debt was totally worthless, you must file a claim by the later of the following: 7 years from the date your original return was due. Things fall off the credit report after 7 years, huh? Or 2 years from the date you paid the tax. And this is for businesses. If the claim is for a partly worthless bad debt, you must file a claim by the latter or the following dates: 3 years from the date you filed your original return, or 2 years from the date you paid the tax. We got other expenses. Standard mileage rate is 54 cents per mile. Businesses can deduct 54 cents per mile. That's the standard mileage rate as of 2016. There's travel, meals and entertainment, charitable contributions, education expenses, lobbying expenses, penalties and fines, repayments, and there's other miscellaneous expenses. So all these are, all these would be corporate liabilities, which when it comes to taxation or tax forms, these are corporate expenses. Now, the reason why this is Commerciavelli personal versus corporate liabilities, because personal liabilities, if you look at the deductions available for personal deductions, it's not anywhere near the deductions available for corporate expenses and corporate liabilities. And that's really, the point I wanted to bring home with this episode. I just really wanted to point out the fact that this isn't really being brought. This information is not really being pointed out even. Say go to school, get an education, go to college, so on and so forth. But it's like, if you don't know how to run a business, if you don't know how to, or the foundations of business, if you don't know the foundations of accounting, if we don't understand the foundations of wealth creation and the foundations of wealth preservation, all we're doing is creating wealth for other people. And I don't know about you, but I'm tired of creating wealth for other people. So in order for me and mine, which is y'all, to begin to not only create wealth for other people, but create wealth for ourselves and our own families, and maybe even stop creating wealth for other people and let those other people just be our families and family members, and in charitable movements that we want to make in the public, this information is paramount. And that's, what this episode was all about. I don't really, want to go too much more into the document, but I do want to say that the fringe benefits, what we went into last week, publication with regards to fringe benefits, those are business expenses. It's covered under the business expense publication. And these are all deductions. Some expenses must be capital expenses, and some of them are deductible expenses. But, either way, they're, capitalized expenses, or deductible expenses. But either way, these things are expenses that provide for deductions and credits on the business tax form, on the business tax filing. Now, when we get into this and understanding that fringe benefits is an expense that is deducted an allowable expense or allowable deduction, then we understand that there are a lot of personal liabilities that don't necessarily and need not necessarily be personal liabilities, that they can ultimately be corporate liabilities and as such be a lessening of maybe, tension or specific liability and responsibility on you, on us personally. And this, in my opinion, incentivizes our education as well as our activity in actively starting and administering businesses, declaring, properly administering private trusts, and how to do that, as well as why to do that for the furtherance of our estates and our families, to build our communities by building our families, and to be in a position to where we don't have to go too far to find a friend, neighbor, or family member to do business with. And we know and understand, at least have an idea of what they're going to do with that money, their habits, and so on and so forth. And that coupled with, a family foundation, not the foundation, this program, but a private family foundation, in my opinion, is the proper way to administer and control wealth, from the private to the public and back to the private. So, I don't know, Sharif, you got anything? I got a couple more points, but you got anything to add? No? Okay, good. So, when it comes to Commerciavelli, we understand that Commerciavelli is commercial warfare. Commerciavelli is the war of the avatars, the war of the names, the war of the trade names, the businesses, so on and so forth. All these names in commerce, regardless of what name you're doing business with, it is accompanied by an EIN or some sort of reporting number. And these are the rules and fundamental rules of, Commerciavelli. Another personal expense, and we went over this, with the last show, and one of the first expenses I recommend moving into the business is the cell phone. The company's cell phone. There's two reasons specifically. The first one being that it does qualify as a business expense under the fringe benefits application of business expenses, as well as when you're dealing with building your business credit. And I know a lot of us, aren't really familiar with the processes of building business credit, and the fundamentals of building business credit. But one of the fundamentals of building business credit is that a business cell phone account, mobile phone account, T-Mobile, Verizon, what have you, it's what I would say a positive liability in the way of building business credit, whereas every on-time payment of that, that service is reported as a positive to the business credit reporting agencies. So now there's Equifax business, there's Experian business, there's TransUnion business, as well as Duns & Bradstreet. Now, Duns & Bradstreet predominantly, and most, from what I know, understand exclusively, deals with trade lines and the reporting of trade line, credit and what have you. Whereas Experian business, Equifax business, TransUnion business, they deal with the corporate accounts, revolving accounts, and I would say a business mobile account falls under that distinction as a revolving account. It's post-paid, which means the service is extended, and then it's billed, and then you pay the bill, when it's due. So that would count as a revolving account, as well as a business corporate card would count as a revolving account. Whereas on a personal side versus a personal, your cell phone is just a personal liability. You don't pay the cell phone. They charge it off to personal credit, and it's negative. You do pay the cell phone. There's no positive reporting of that payment. So, first and foremost, when it comes to business expenses, a lot of us are doing business. A lot of us are doing business out of our homes. A lot of us are doing unincorporated business. Not necessarily from the unincorporated business trust standpoint, but definitely, we're doing business, but we haven't incorporated on a state level. And a lot of us are doing business because we don't understand these fundamental, principles with regards to what are the positive aspects of doing business in this manner. So, one of the positives is the thing that you're doing already, which is paying that cell phone bill, is going to build your business credit profile. Building business credit could be definitely a potentially cantankerous undertaking, and it's specific. You got to be strategic in most points, and it takes a mind state. And if there are positive aspects to that mind state, and those positive aspects are, a business credit profile can receive exponentially more, credit extended than a personal profile. Personal profiles usually max out, and those are maxed out at high-end professions, doctors, lawyers, and the like. Whereas business credit profiles, especially depending on how you have it coded, can get into upwards of 2, 3, 4 millions, 10 millions, so on and so forth. This is the amount of credit that can be extended to the business, which is, definitely more incentive, in my opinion, to begin to build your business credit. And it's not too hard. Matter of fact, I'll go into a couple points of building, business credit initially, and then I still got a couple callers. And then I'm going to see where Sharif's at. But, with regard to building business credit, number one is you have to have a business name. You have to have it incorporated with the state, whatever state that you're in. You have to have an EIN. You have to have obtained an EIN from the Internal Revenue Service. I would call that step one in the basics. After that, once you do that, you want to obtain some sort of business address. You want it to come up as commercial and not residential. If you have a home-based business, that's fine. It's not going to hinder it. It's just going to, in most times, require more verification and take longer to actually build out the profile. But if you can get your hands on some sort of commercial address, whether it's, they don't usually like P.O. boxes, but I've seen people work with a UPS address, and they list the UPS store as the address, the number, and then the box, whatever number they list that as the unit or the suite, and I've seen that work. But you want to get some sort of commercial address. You can get mail services. You can call around to different spots that have cooperative offices. A lot of the times you can just rent a mailbox or, a suite number where they keep your mail, and that will qualify. But a commercial address is very, very important, and that's key with regards to establishing a business credit profile solidly, with a solid foundation. Also, you want to get a business telephone number. You don't want to use a cell phone number that you already have on a personal account. It's real easy to do that, but you don't want to do that. The easiest way to do that is get it, at this point, from what I understand, is, most people have a Gmail. If you go to, google.com/voice, and you're logged into that Gmail account, it'll bring up, Google Voice, and you can request a number, It's a voice over internet protocol or a VoIP number. You can have it forwarded to your cell phone. So that way it's clean. It's not attached to, anything personal. And you can establish, listings. The 411 listing, which is the next step, or step 3. Am I at step 3? Step 3. You got to list yourself in 411. You got to get yourself listed in 411 locally. Probably want to get on maps.com or something like that. It's not hard, but you want to get yourself listed in 411 or your local 411 directory at the very least. You can go online and handle that, and you can pay for it. A lot of these sites charge you for it. I know of ways to do it without, having to pay, but you email me because it's a process that I can, we can deal with. You can email us to hfrn.foundation@gmail.com. But there's some paid sites to get listed. But, get the business listed with that number, that Google number, that voice number that you set up, and with that corporate, commercial address that you got, it get it listed in the 411. So when you're looking to fill out applications, whether it be online or over the phone or, in person, and they do a credit check internally, especially when you're doing trade accounts, they're going to do a listing or search for your business in 401. They're going to ask for your business name, they're going to ask for your business phone number, ask for your business address, and they might ask for some other things off top, the EIN and all that. And then they're going to do a search. I'm serious. They're going to do a search in the state where you're at, where you're incorporated, to make sure that it's in good standing, the actual entity itself. And then they're going to do a search in 401 to see if the business is listed in 401. And if it is, you surpassed, the first hurdle, and this is how you start getting trade lines. And trade lines is like Uline, Granger. These are different accounts that you get. Where predominantly, I recommend that you start off with just toilet paper and cleaning supplies like dish soap, things that you already buy for your household, so you don't incur any more personal or corporate liabilities while you're building out the profile. You know what I mean? But they extend credit, and usually if you did the actual establishment correct, it'll be between $500 and $1,000, but that'll be on net terms. Net terms being you got to pay the bill off in 15 days, 30 days, they got 45, 90 days, net 90, net 30, net 60, and they'll tell you otherwise. You got to make sure that you figure that out. So, from there you got, okay, so you're buying some toilet paper, and I know it may sound funny, but why not? And that's a business expense, man. Even if it's an at-home business, and it's legit and substantiated because it's in the business credit profile, it's being paid for by the business. The account is set up in the name of the business. The business has its own phone number. You got the organizational documents. You're legit. As well as if you transfer your personal cell phone into a corporate account, you went down there, you're like, I like to set up a business account. Or you call them up, I like to set up a business account. And you transfer the personal number into, the business account with the change of financial responsibility. You're building positive credit on the Experian business, the Equifax business, so on and so forth. Now, that's key. What I just explained is foundation. And what that is the thing that you're already paying for on a personal liability side. Not getting no deductions. It's not expensible. Nothing at all. Now, half of it, how are you deducting your cell phone service? How are you deducting your toilet paper and your dish soap? You're not. But now you do this in the form of an entity. There's all types of publications that go into different types of expense classes that are deductible with regards to doing business. Necessary, if you have a home-based business, you need toilet paper. Part of that home-based business, the employee of that home-based business is going to have to use the bathroom. Might have to make snacks. You know what I mean? A home-based business provides some of those snacks. That's a fringe benefit. Go back to last week and check out the episode on fringe benefits. Talk to your tax attorney, because I'm not a tax attorney. I'm not an attorney, tax attorney. I'm not a CPA. Talk to your tax attorney. See what type of fringe benefits you can take advantage of with your home-based business. That's how it starts. I wasn't ashamed. We can't be ashamed to start at home. Bill Gates started in his garage. At least he had the space to work. So, if you got the space at home to work, use it. Start a home-based business. Start transferring your personal liabilities to corporate liabilities. Now, on the corporate side, there's a lot of deductions. You understand what I'm saying? Now, you got to do business, You got to offer some sort of product or service. You can't just set up a business credit profile and just, do this, and then you fund the account that you pay with the business for your personal. You got to offer some sort of, good or service. But these are necessary expenses for a business. A cell phone is a necessary expense. A home office is a necessary expense. The facilities to use the restroom is a necessary expense. Potential fringe benefits with regards to, meals on premises. If you got a home-based business, is that on premises? Certain deductions are, available if you're operating from the right entity. If you're operating from the right position. So, that being said, that's about it. I don't really want to go into too much beyond that. I don't want to, convolute things. I do want to say that, a lot of the information I said is people charge a lot of money for. Let me tell you that. And I'm not saying it like, oh, give me a pat on the back or nothing like that. I'm saying that like I'm leveling the playing field over here. You know what I mean? Like, people going to email me. I already know. I've already got emails. And I've even been on, other, people ask me to go on their show, and I went on their show. You know what I mean? And when I start speaking, they say, oh, that's private, man. You got to talk about it in the private. You don't talk about that. And it's not necessarily private, man. Business expenses aren't private. Controlling your wealth without owning anything is not private, or not just private, or subject to just being private. It's really public. And there's a lot of publications. There's a lot of information in the public with regard to doing business. And I'm telling you, the public is a mirror of the private. So all I got to do is, if you're stepping on the private, just, switch it up. Understand that your right was your left and your left was your right. And, after a while, you get used to it. And you go back and forth. So, with that being said, I definitely want to say, to everyone, I want to thank everyone, for tuning in. I'm going to go in. This is, the foundation you're tuning in to here on High Frequency Radio Network. I'm your host, So L. Sharif Ali was with us. I don't know what happened to him. But, he rocks with me on this show, usually and regularly. You can check out highfrequencyradionetwork.com. There's a lot of information on that website with regards to public and private. You can learn a lot. It's free. You can download the PDF. You can print it off. You can read it on your phone. And however long it takes you to read the information is on you. Just begin to check it out. And highfrequencyradionetwork.com is a great resource for that type of information. Welcome to the vault.com. Y'all know I got my start on the vault. Even though I'm doing the foundation now, I still do business with, Sharif Ali. Obviously, that's my brother. So, welcome to the vault.com is a great website, that we have up there. It's got information. You can sign up to the email list. We put out information. We should be putting out more information on the email list, but I will be doing that more and more in the future. Once again, you can hit me up, HFRN period foundation at gmail.com if you want to holler at me in the private. I do that. I do a lot of business with my brothers and sisters in the private, and I extend that to you. As well as, I'm just going to say this, we need to be diversifying our assets. So if you got any paper assets, you got any stocks or bonds, you got a retirement fund, anything like that, if you can get your hands on it, self-directed, start obtaining, hard assets, gold and silver. In my opinion, American Eagle gold coins, which is IRA approved by the IRS, as long as it's held by a custodian, third-party custodian. Get your hands on some gold and silver, some real assets, property, so on and so forth. Don't fall into what's going on, refinancing mortgages and doing all this stuff unless it's absolutely necessary, So also, if you're trying to get down, check out carat bars. We deal in carat bars as small denominations of gold. I know a lot of people can't get ounces, even though an ounce of silver is relatively cheap. You can get an ounce of silver for about $22, depending on where you're at. But gold itself isn't easily acquirable. So, carat bars makes it more affordable, small denominations of gold. You can hit us up, HFRN.foundation@gmail.com if you want more information. And, we'll get you rocking with that. Yeah. This is really important to me, this show, the foundation. And I appreciate everyone who's checking it out live. I also appreciate anyone who's checking out in the archive. This is charity for me. This is one of my passions. Like I said, I've been all over the world, and I've seen, people who look like me in really messed up environments and places, no matter where I've been. And I want to be a catalyst for change of that. And how I'm doing that is with High Frequency Radio Network. Yusuf L, my brother, Sharif Ali, and we're doing that through, the programs that we put forth on the network, as well as, the ongoing efforts that we put forth in the private as well as the public sector. So with that being said, I got some callers, man. So what I'm gonna do is I'm gonna take it to the phone lines. Why not? Sharif, man, you there, man? You fall asleep, man? What's good? My man, incognito. 478-1152. 478-15. Peace to the guys, man. What's your name? Where you calling from?
Hey, what's going on with you? Y'all calling from Fort Valley, Georgia, bro. Down here in the country. Can you hear me?
Yes, sir. How's it going, man? How you
can't
doing?
Hear me. Hello?
No, I can hear you.
All is
Can
well,
you hear
bro.
me?
All is well. Okay, I hear you now. I got a question, man. Oh, I appreciate all the info you're giving out, man, because that's basically why I tuned in tonight to get some of the basic foundation. I'm about to start I started a business myself and had many facets to it. And I was wondering, how do I start my business let me say this. How do I get my business started where it's not attached to my Social Security number? So my EIN to have its own other entity is attached to it instead of my personal Social Security number. You see what I'm saying?
Yeah, you either need an EIN or someone else is willing to use their social. I know what you're saying, man.
So either way, it's gonna go back to my original social.
Man, just email me, HFRN.foundation@gmail.com.
All right,
but basically,
I also need to find out how to put it in my trust.
Yeah, we do that. We do that through trust, man. But there's public and then there's private. And that's private.
All right.
I'm not trying to shut you down in any way. I'm not at all. But I'm definitely trying to not make commingle. You know what I mean?
I understand that. Indeed. Yeah, but
I also want to give
you that pat on the back, man. You deserve it. No, I just want to give you a little shout, man. You know what I'm saying? Give you that pat on the back because you deserve it, man. You know what I'm saying? Putting out the info and breaking stuff down, on a basis that the layman can understand it. A lot of us out here starting out need the basics. So just want to share that
Right.
with you. Tell you I appreciate it. Yeah, you know what I'm saying? My name is Topic Ill. I'm going to be tuning in. I've been tuning into the vote recently, and you know what I'm saying? So I'm listening to y'all brothers, and like I said, I appreciate y'all efforts. You know, I look forward to dealing with y'all. I'm definitely going to shoot you that email.
Yeah, appreciate it, man. Hey, all praise is due to the ancestors, man, but thank you very much. What did you say your name was, bro? I want to get it right.
Atafi Lee Ill. Yeah, I'm Samoan in African descent.
Well, you know. Yeah, peace, brother, man. It's nice to meet you, man. Thanks for calling in, man. I appreciate the accolades and the good words, man. And, you know, I'll check you out next time,
Keep
man.
it up, bro. I'll be in touch.
Peace. All right, man. Peace to you guys. You know, I like to get people's name right, man. You know, I know what it's like, people tearing up your name. I dealt with that many times. Next caller. 718-4911. I think I know who this is. Peace.
Peace, L. Peace, Sharif Ali. And okay, like you know, like 1929, the crash. You know, people, you know, jumped off the roof, and you know, a lot of people they lost their business, and they lost a lot of stuff, and you know, they can't handle it. So, is there anything out there they can read? You know, to help them cope with, you know, their business failure, or because I know one guy, you know, he used to rock his gold, but he's no longer here with us right now. But they stole all his gold. You know, he used to rock his around his neck and everything, and they broke into his place. And when he saw that he got sick, he caught diabetes. He got sick. You know, some people like you know, get, I guess, temporary insanity, get temporary sick. Because, you know, they get so attached to stuff. So, like, you know, they can always regain a lot of materialistic things. But you got a lot of people, when they lose something, you know, like, they just, you know, it's like somebody may steal a car from them. They steal their money. They want to fight. And they want to lose their lives over stuff that they could easily, you know, work for and get again. Is there anything out there that they can read and, you know, they can, you know, be taught that it's not worth it to, like, you know, bug out over, like, you know, stuff that they can, you know, get again just by working for it or just waiting? Is there anything out there they can read? Cause I mean, you know, things have been done to me. I took it on the chin. I shook it off. Like, they're like, wow, that's an infectious dude, you know? That, you know? So, but is there anything out there? Because I was looking at, you know, y'all talk about accounting and y'all talk about contracts. I was looking at this thing with this guy named Ben Affleck, whatever his name was, and he had like stuff like comic books. He had gold coins. What else he had? He had like, you know, about $1,000 euros. You know, in this little like trailer. You know, I think I forgot the name of that type of trailer he had. But I mean, you were talking about a custodian before things. Hello, you still there?
Yeah.
Hello?
Good.
I think it's something that people have to hold, that it can't be in your possessions, because people was coming there. When you dip out, they're going to dip in and rob your stuff. So, I mean, you know, it's either going to have to be holding a rope, you know, or like a safety deposit box. But is there anything out there they can read, you know, to help them, you know, deal with something like that? If, you know, they get stuck up or they get robbed. Is there anything out there, or their business flop? Is there anything out there to keep them, you know, for like, you know, just feeling like down, you know, like, oh, I locked up now, you know, just like, hey, don't worry, you know, hard times will last forever. Is there anything out there that they can read?
I mean, that's a broad question, brother. I mean, what I would say is, you know, beyond reading, is to know that, you know, the possessions don't make the man. The man is the one that makes the possession. But I mean, I like the emerald tablets. You know, the emerald tablets.
The emerald tablets.
It puts stuff into perspective. You know, it's kind of humbling. But yeah, the emerald tablets.
Okay, and
emerald tablets.
Yeah, I can understand why some things are in the private, because what happened is that, you know, for the ones who don't understand, I mean, this is a capitalistic society. and they just want people to pay for things that they want to purchase or they want to know. So that's the only reason why a lot of things is in the private. So so they like people to make money. So that's the only reason why a lot of things in the private. You gotta pay for some things if you want to know for some things. There's ways to go about it and purchase it. So that's why some people they get a little upset that when they hear that word private, because a lot of people don't understand private. But as time go on, they'll understand private. Just like I used to tell people before that record came out at different levels, because you may be on the first floor, and on the first floor you got 1A, you got 1B, you got 1C, and you got different alphabets. And you think you done heal, and you ain't heal, because then it's a second level, it's a third level. So as they say, it's different levels to this shit. So a lot of times when it comes to learning stuff, it's different levels to it.
True indeed. Yeah, I agree.
Yeah.
I agree, and that's this level right here. This level right here, we're trying to come with the foundation, So,
yeah, so we on level 1 right now. We on level 1. To all your listeners out there, we on level 1. There's plenty of levels. There. One thing, so that's the Emerald Tablet. Okay, I'm gonna check that one out. I'm gonna definitely check it out. And to all your listeners out there, you'll check it out too. That so help you through your hard times. Hey, well, listen, Sharif didn't bail on you. He just let you do your day, because today's your day, and yesterday was his day and your day. But since you want to do the foundation, hey, you're gonna do the current events.
I know he got me. He right there.
Yeah, peace to all y'all. I love y'all. Hey, y'all go ahead and keep on doing your thing. All right.
All right, peace to you guys, Brother Daryl. Thanks for calling in, bro. 205 03. Oh, yep. 205 0377. Peace. What's your name? Where you calling from?
Peace. What it is, it's the brother Mello.
Oh, Mello Bay. What's good, man? How you doing?
Peace. It's the brother EPL back in here with brother Mello again. Peace.
Peace, brother. Peace, brothers. How y'all doing, man? What y'all think, man? Y'all feeling it? Y'all feeling the show?
Yes, sir. We on time today too. You know what I'm saying? And stuff. So, I want to get your take on. I be listening to like a little Freedom Financial Network. You know what I'm saying? It be coming on the radio, on the public radio down here and whatnot. And I was listening to. I was checking out IRAs and annuities and things like that. What's your take on annuities though?
Man, look, if it's not, to me, right now, because I feel like, we ain't really at the capacity or the foundation to be like playing with our money. We need to get our foundation correct. So it's like, if it's not hard assets at this level, I'm not really trying to talk about it. You know what I mean? If it's not real property, gold and silver, and the basis, the foundational basis that we need for our family and our family wealth, I'm not really, that's not foundation. Now, when you're dealing with IRAs, it depends. Now, if you have a job, you work in the public, and they offer some sort of, benefit program with regards to retirement, and they match it or something like they match your contribution or whatever, that's when I get into IRA. So, like, if you already got it set up or you don't have a job anymore, you want to roll it over, you roll it into an IRA, a self-directed, and you purchase precious metals with that. You know what I mean? And that's still, it still qualifies on the Internal Revenue Service with regards to an IRA, as long as it's held by a third-party custodian, but it's held in actual gold and silver. You know what I mean? Hard assets. I'm not feeling, any type of the market right now. I'm really not. Our people don't have the foundation to be losing, any type of money real quick. You know, I lose $5, I'm ready to fight. Probably, like, you know, what's good?
Yes, sir.
You know what I mean?
Need every red cent, for real.
Yeah, for real. It's like, at least at this level, you know, we got to get a hold of some industries. You know, we got to get a hold of a real, like I said, foundation to where we, you know, and then we can start pulling our resources together, and then we can start getting into, you know, higher level risk investments and stuff like that. You know, because, you know, maybe we can afford to lose it. We got our health plan taken care of. You know, our family finances taken care of. You know, we don't need no loans or debts and none of that stuff. You know, there's different types of strategies that is used in the private for personal banking, man. You don't even need to take out a loan with a traditional bank or anything like that, credit union or whatnot.
Okay.
You know, so like there's different stuff. So like I said, I'm here to lay the foundation. It's just like so we can move into these different entities because to me the promised land is behind all this public stuff, all this Commerciavelli stuff. It's behind it, and that's the private. You know,
right.
But you know, I'm gonna go through it. You know, probably next week I'm gonna go through gift and charitable donations, because as a W-2 employee, 30% of your gross annual income can be deducted as charitable, you know, donation if you give it to a charitable entity, which is huge if you have control of a private family foundation that has charitable status from the Internal Revenue Service. Wink, wink. You know what I'm saying?
Mm-hmm. Yes, sir.
As well as on top of that 30%, you know, $14,000 per year can be gifted and excluded from your taxable income, which lowers your taxable income. $14,000 per year can be gifted to a private trust, a private family trust. You know what I'm saying? Wink, wink.
Right.
So what I'm saying is, you know, with the foundation, we can start doing this stuff from where we're at, as long as we get our foundation solid. You know what I mean? And I appreciate y'all, you know, checking out the program, man. And, you know, we're about to go far with this.
I had one I wanted to squeeze in real quick. I'm doing a lease to purchase, right, with this truck driver company, and my goal at the end is to try to get the truck or whatnot. That's my end goal. So I'm trying to see, is it a way that, you know, instead of them just, you know, I'm doing just lease to purchase as just every week as it coming out my check, is there any kind of way that I can write this up and go to a bank and try to get a loan or something on this? And, you know, that they to purchase the truck faster?
From the standpoint of a corporation or the standpoint of
standpoint of the corporation.
If you haven't established, go ahead.
Yeah, through the company. It's through the company.
Okay, yeah. It's tough if you haven't established a credit profile. You know, and when you're looking at financing vehicles with business credit profiles, we're looking at least a year of building that credit profile out.
Okay, so basically I need to start a business profile personally with myself.
Nah, with the business. If you're looking to do it under the business. I mean, you got an LLC or what do you got? You got a company? You got a corporation?
No, it's through my end goal is to start a corporation after I get the truck. But I'm working for a company that have a lease to purchase program.
Oh.
Mm-hmm. Yeah.
Oh, okay. So the truck is titled in the company's name that you're leasing the purchase from?
Right.
Yeah, see, that's kind of complicated.
Okay.
But then, like, if you start a business, check this out. And I'm not a tax attorney, bro, and I'm not a CPA, man. You know what I'm saying? So I'm just talking here.
Okay.
If you start a business, you know, the amount of use that truck is used for the business can be expensed, and you can invoice the business that you start for the expense and reimbursement of expense. It makes sense?
Yeah, it makes sense.
That's why I said
it makes sense.
Okay, yeah.
Yeah, because that's my end goal. Once I pay for the truck, I'm going to more as the owner operator, and I was gonna start my own business.
Right. So the company you work for, is you W-2 or 1099?
I'm 1099. I think I'm 1099. No, I'm W-2. I'm W-2. I'm W-2.
You're about to be good. You're about to be good. I think that's a good situation. I mean, if the terms of the lease to own are pretty, conducive to your finances, if it's not hurting you, yeah. How long is it? Like 3 years, 2 years, 4 years?
It's like I think right now it's like 4 years, but I think like 2 years. I'm sorry, like 2.5 years, 3 years. It all depends because I'm changing up some things. I'm going to start doing like personal. I'm going to start doing training, so that'll kind of double it up for me to be able to pay it off a lot quicker. So, but I got to check into that W-2 and that 1099 though. I got to see which one it is. But I just know that I'm getting a W-2 because I was getting some messages from the job saying they're gonna send a W-2 out. But if I'm not mistaken, I think I had filled out a 1099 though. I got to go back and see again because we were going through orientation. It was so much coming at me at the time, and I was so ready to get on the road. I got to go back and see how I filed it. But yeah, that's how the lease is set up. It's like a 2 years, and they got a set amount to be able to pay it. But at the end, there's no balloon cost. It'll be all me.
Okay. Yeah, I mean that's not bad. You should incorporate, man. Incorporate a business.
Yeah. Okay. So it'd be good to start.
I would definitely
incorporate it as soon as possible.
Yeah, I'm going to the Georgia Secretary of State right now. I'm trying to look up what the fee is real quick for you.
Okay.
Sharif, you there? You know what the fee is off the top of your head to incorporate in Georgia?
No, I really don't know what it is yet. I'll look it up.
Here we go. Here we go. Filing procedures for an LLC. The fee's $50. It looks like.
Okay, so it shouldn't be that far away because we right next door in Alabama, so that
right.
It shouldn't be that much of a difference. So I need to get this LLC.
You said Alabama?
Yeah.
Sorry about that.
It's fine.
It said probate, Alabama Secretary of State. Real quick, just because you already here.
I definitely appreciate it.
It's $100.
Okay.
Domestic
right.
LLC filing is $100. Yep.
Okay, domestic. Okay.
Yeah.
LLC. All right, I'm writing it down as we go. Okay.
Yeah, it's $100. So $100, man. You in business.
Okay.
And the EIN is free, IRS.gov.
Okay. Suppose I already have EIN, I can still use that same one? Or do I need to get a new one?
Is the EIN in the name of the business that you're about to incorporate?
No, it's in the name of another business.
Oh. You use that to get the EIN? That's what you're asking me?
Oh, no, I'm just talking about just that same EIN number. Can I just use that one for, for the trucking business as well?
Oh, yeah. You can use that to get the EIN for the new trucking business.
Okay, because I already got an EIN. That's why I was saying I can use that same number.
Well, no, you can't. You can't use the same number for the new business that you're about to incorporate.
Okay.
But you can use that number to obtain the EIN for the new business that you're about to incorporate.
Oh, I got you.
I thought that's what you were asking. My bad.
Yeah, that's why I was asking. Yeah, that's why I'm asking you. Just can I use the previous one, or can I use the one I have to get another one?
You use the one you got to get another one.
I got you. Okay.
In the name of the business that you incorporate, you can do that. Yeah.
All right.
All right.
Okay. I got that down. I appreciate it so well, indeed. That's gratitude to you, brother. Honest.
Oh man, no problem. Y'all good?
Yeah. Hey,
good?
so. Yeah. Hey, I was just checking out that video the other day, man. But with the brother Juan, I Motel. You know what I'm saying? It was deep, man. You know that's deep right there. He was talking about that return on energy, that real exchange. You know what I'm saying? We need to capitalize on that for real, bro.
Yeah. You know, his principles on a lot. You know, on that specifically, with regards to currency, or energy exchange, helped me feel good about charging, and then the understanding is like there's a minimum wage, but there ain't no maximum wage. But can't nobody tell me what my time is worth. It's worth what I say it is, or it's worth what you pay for. So it's like, yeah, I'm really bringing spiritual principles to business and spiritual principles to everything. What I strive to do every day.
Indeed.
Because I've garnered so much success in forward movement.
Indeed.
Yeah, Ra, he's
respect that, bro.
He's cold.
Tapping into that creator energy, you know what I'm saying? That pure raw, you know what I'm saying? Like tap creator energy and actually truly getting compensated off that, you know what I'm saying? So, that's where the true work's at right there, bro. You know what I'm saying? We gotta respect the creator though, because really, man, if you really look at it, bro, we really don't own nothing, man. It's the creator energy, man. You know what I'm saying? It's like co-creators, you know what I'm saying? Well, we are co-creators, you know what I'm saying?
Exactly.
So, and we gotta respect that. So that's where the proper first business started with me, actually, man. Spiritual. We do spiritual business on down the line and follow that true divine, you know what I'm saying, timeline. And everything else should be a breeze, you know what I'm
saying? Exactly. Yeah, man. True indeed.
Indeed. Oh yeah, man, I appreciate it though, you know what I'm saying? It's all good though. Oh yeah, the big brother, the mentor Yusuf gave me some little in and some outs, you know what I'm saying, the other day, man. He gave me like a 1-800 number for the business. He sent me to the creditboard.com, and also that freedom voice you just spoke on, you know what I'm saying, like $9 a month. So the family need to jump on that though. You know what I'm saying, real sick.
Yes, sir. Yes, sir. A lot of jewels being dropped. Rewind the program. Yeah, I appreciate y'all brothers calling in, man. I really do.
Indeed, bro.
Yeah, man.
Indeed, bro.
I'm gonna be here next week. We're gonna be here next week. You know how it is.
Indeed, bro. We'll be back, bro.
Peace to the guys.
All right.
Peace to the stuff, bro. Appreciate it.
Peace to the guys.
Gratitude. Peace.
Yeah, absolutely. Like, look, here's what I'm saying. Our spiritual principles, right? I'm I like to say that, I'm a spiritual guy. I'm not religious. I'm spiritual. You know what I mean? And it's like, I attribute it to this. You know how you got a scope, for a gun. I know this is kind of raw, but check it out. And they got the latitude line and the longitude line, and it meets in the middle, and that's the aim. All right, so how I look at it like this is, it's like one line is intention. You know what I'm saying? And the other line, there could be another line, and that'd be, the overall feeling behind an intention. You got another line of, demonstration, another line, of the follow through, and there's a lot of things that add up to, being on point or having correct aim. And when I apply spiritual principles to the things that I do in everyday life, I really benefit, and I would really, really, recommend that everyone do that as well. We're coming towards the end of the show, I guess. 424-222-5250. If you're listening online, you want to call in. I got a text. Someone said they was having an issue calling in. Sharif, you got any additions, man?
Nah, man, it's just another solid episode of you, saying what needs to be said. I think these are the matters. I like hearing this, so I'm excited.
Yes, sir. So, you got a couple callers, but I just wanted to say that Commerciavelli, in the Commerciavelli series really encompasses how I look at commerce and how, commerce encompasses everything that we do every day. From paying bills to buying food for our families, for ourselves, to getting on a train, renting a car, paying for your car payment, cell phone payments, so on and so forth. These things are what really break down to commercial transactions. And in these commercial transactions, the way I see it is built in a predatory manner, especially if you don't have any understanding in education. In this episode, I just wanted to go in and express how not only are businesses treated differently with regards to deductions with the tax code and how they can depreciate assets and what type of expenses they have, they also treat it differently with regards to credit reporting and credit scoring. And that's very important. Would you continually drive to work? No. Let's say take public transportation to work, and then someone told you that there was a faster way to work. Would you continually take the slower way? It was like, there's a faster way and there's a cheaper way. You pay less taxes if you do it like this. Would you continue to take the way that you know, regardless of if it's slow, because it's more comfortable, because it's less of a hassle, because it doesn't require you to learn anything new? Or would you actually ask questions and determine and inquire to what exactly is this other route? How is it faster? Are you sure there's less taxes with regards to taking this route? And at least try to take it once or twice. So this new route, what I'm saying is, it's understanding the principles of Commerciavelli. You've been taking the same route your whole life, period. I don't care. We've been taking the same route our whole lives. And I'm telling you, there's a faster, more convenient, and less expensive and taxed way to do what you're doing right now. And it serves for more benefit. The only thing is that you got to learn a new way of doing things. You have to have a different mentality and understanding of how to administer entities, how you administer the entity that you think is you, which is really your representation in the commercial world. And a lot of us don't have agreements, personal private agreements, with regards to that representation in you in the commercial world. But That is, in my opinion, the issue, that understanding, and that's why, specifically the foundation, the series Commerciavelli, is on High Frequency Radio Network. Bottom line, we've been doing business wrong. And there are benefits to doing business in a different way. There are benefits to taking fringe benefits and putting the liability on the corporation versus on the personal. There are benefits for business deductions, health savings accounts, investment accounts, employee stock options. We got corporate vehicles, corporate cell phones, corporate charge cards, corporate events, corporate meals, corporate trips, corporate expenses, and the normal conduct of business. And look, that's not the normal conduct of the business as we know it, the business the way we've been doing it. That's the normal conduct of business. So what is the normal conduct of business? It's something to investigate. Normal conduct of business is corporate liabilities, business expenses, fringe benefits. Operate your own company. Maybe you can't cash out the health savings account. Maybe you can't offer employee stock options. Maybe it's going to take you a while to get a corporate vehicle. But to start, how long did it take you to get where you're at right now? And how's that working out for you? I know we hurting. I've seen us all over this world hurting. And we hurting because we lack this information, foundational information. A lot of us are in the public. A lot of us are W-2 employees or contract employees, and we take the, that 1099 and do a 1040 because we don't know any better. And we miss out on business expense deductions. We miss out on deductions for fringe benefits. We miss out on building corporate business credit profiles and getting positive for doing what you already do and you already been doing. Personal expenses are for the birds. This is why at least we start a home business, a home-based business. You want to go private, that's fine. How are you going to fund that private trust? The Internal Revenue Code already says that you can gift up to $14,000 a year. You think you're going to go private in 4 months? You think you're going to go private in a year? How fast you think it's going to be available and applicable for you to go private? And how are you going to fund that? Privately, what do you own? I'm not being condescending or pejorative. I'm just trying to point out the actual factual reality of what we got going on right now. And that is, we don't know how to do business. We don't have the foundation. We don't understand that we in commercial warfare. We don't understand that it's ultimately the extraction of the wealth of the continent, of the land, of the country. Whether it's human resources, energy, which is wealth, or commodities, gold, silver, wheat, barley, corn, dirt, mineral rights. All these things of value. And the game is being played right before your eyes. And we upset. Not even because of how we're being played, but we upset because we're not even in the game. Our ancestors built this. A lot of it, most of it. Our ancestors, you know, and we are heirs to it, depending on how you look at it. And as foreign nations and foreigners profit off of your resources, off of your energy, and the resources from your place of birth, we stand by and watch. And we're cool and content with being distracted. Study Rome. Study ancient Rome. You know, study why they had a Colosseum. Study the dimensions of the Colosseum. And then study the dimensions of your, you know, modern-day stadiums. It's happening right around you. You know it. Fundamentally, you know it. Deep down, you know it. Angry, upset. How? Why? How is it happening? I know it's happening. How is it happening? Commerciavelli. That's how it's happening. Deflation of currency. That's how it's happening. The minimum wage or wages not keeping up with inflation. That's how it's happening. Raising interest rates to where you can't afford your mortgage anymore. Constricting currency policies to where you get laid off. And they call it a housing crisis, a housing market bubble. Mortgage crisis. Not a mortgage crisis. It's an education crisis. There's informed families and uninformed families. I happen to come from an uninformed family. But I met someone that was informed. And I informed myself most of all. So when I met someone that was informed, I knew that they were informed. This is the foundation. It's commercial warfare. War for your labor, yo. You go to work and exchange your labor for all this stuff, and then it's tax replete. 8 hours a day is a third of your day. That's a third of 24 hours. A lot of hours. And are you getting an equal exchange? The brother came on earlier. Mello Peg said he saw, Ryan Mahotep. He's a friend of ours. We like his work. We respect his work. He was talking about energy exchange. Are you getting the proper energy exchange for what you're doing? For those Federal Reserve notes? So we just need to learn how to do business differently, you know? That's what we're here for. That's what I'm here for. I'm so this is the foundation. I want to give a shout out to everybody who checked us out live. You know what I mean? Peace to you. We appreciate you. I want to give a shout out to, anyone who's checking this out in the archives. Appreciate you as well. Shout out to the trustees and anyone I deal with in the private. New listeners, old listeners. I appreciate you. Shout out to Yusuf L, High Frequency Radio Network. You know what I mean? We got about a minute and a half left on the stream. We might go over a little bit if Sharif has anything to say. If not, you know what I'm saying, we try to end the episode on time. So I definitely want to, say thank you to everyone who tuned in and anyone who rocked with me the whole time. This is the foundation. This is for you. But I still want to thank you. Because ultimately, in the future, anybody who gets this foundation, the probability might be doing business with you or someone that you know, and we'll be doing proper business. And I look forward to doing proper business with you. It's really that simple. I know a lot of people want to go private. I know a lot of people, want to do secure party and do notes, discharge, and all this other stuff. But, if you don't know how to manage your affairs, you don't know how to manage your money, you can get $1 million and be in more debt after you spent that $1 million than you were before you got into the $1 million. Yes, sir.
Hey, So,
Sharif? Yes, sir.
yeah, I always got this example that I think that a lot of people, they hear it, but they think it's cliche, and I'm going through it in my life right now as I grow. But you hear a lot of rich people say, some people say, oh man, if a person's rich, if they lose their wealth, they'll be able to always make it back. They usually make it back faster the second time or the third time or the fourth time if they lose it. People say, well, why did they get it back so quick? It's because they knew what it took to get back to that spot. So my whole thing is when individuals, are looking to advance themselves, they have to think like they already are there. You have to have your goal before you and think as though this is something that you truly deserve, before you ever get there, with your goals. And I just think it's so imperative for people to understand it from that perspective, is that you already have to see yourself there, brothers and sisters, for what you're looking to accomplish. And even today, in my life, I just had a very unique experience, and I fit in. And it wasn't regards to age, it was regards to my thought process. My thought process has put me in a position to be around people that have money, large lump sums of it. And for that reason, I just need to act natural, like I belong. Because in my mind, I always wanted to be there, but you're always going through a constant progression of manifestation, and hopefully in the right direction towards what you want. So it was just an interesting thing to say that, because I just think it's so important for us to really think like that. Like, I'm already going to be there, I'm already there, and I'm already doing it, and I deserve this. And I think so many people, man, they really don't have that type of heart. It's just a wish. It can't be a wish. It's got to be something that the only thing that's going to deny you is the universe. And the universe that we live in is very much so feminine. And she loves having babies and loves having perfect, manifestations happen. And so, our babies are our ideas. And, it's just interesting that you made that point. Like I say, they lose their money and then they end up getting it back the second and third time. It's because they know what a wealth consciousness is. It's not about the money. It's about the wealth consciousness. It's about the success consciousness. I'll end with this one more point before the show's over. I was with my mentor the other day, and he said, he was talking about the 7 Hermetic principles, so then we were talking, and he was like, you got to find somebody on the right vibration. And I was like, yeah, I know, you got to find people that are vibrating at your level, that have the same consciousness. They're thinking about money. Ain't nothing wrong with money. That's a piece of paper that you can use for multiple things. So it's just like, he was just talking about vibration, and, when you think about vibration, you also have to think about the frequency. How often do you have that vibration in your life, the frequency of that vibration in your life? Just telling them about, establishing new habits, and, just a good conversation about frequency and vibration of your thought, because the vibration is your thought. Is it at a certain level? And then you have the frequency. How often are you having that thought? And so I told him, I was like, that's why every day when I wake up, I go into my office. I have a piece of paper sitting there in front of the computer, and it says, this is how much you are supposed to be making. So when I'm sitting around somebody and we're talking about a $200 million deal, it's like, okay, that's fine. It's like it's not abnormal. And then when they say like $6 million it's a lot of money, but it's not a lot of money, it's just like, oh, okay, it's not a lot of money. When you're dealing with people that consider themselves millionaires, that's not a lot of money. So I just wanted to point those things out, that how can someone get back to that level? Think about it. The faster you bombard your mind with being a millionaire, the faster you'll think like, oh, wow, this is not a lot. Just like people are conditioned to think, oh, just because I can afford $100 pair of shoes, I made it. That's not a lot. There's some people that spend thousands and they never get back to hundreds. They always are spending thousands on shoes. So it's just a mindset, a consciousness. And I just encourage our people to really think like, wow, you know, Soda's really good at setting goals. So all of you would be challenged to say, hey, let me go out to where my goal is and see what does it look like out here? What does it feel like out here? What does it sound like out here? You know, and then start bringing those into your present reality and say, wow, okay, I'm having those people come before me all the time. And then when those people come before you, it's not abnormal. It's just like, okay, I can talk to this guy. And that's what I always want to condition myself is just conditioning myself for the success that I ask for. You have to condition yourself with a sense of calm. You know, I like those shirts that say, keep calm. You know, keep calm. You're in business. Keep calm. The ancestors got you. Peace to the guys. So thank you, brother, for letting me share.
Yeah, man, no problem. I want to say this, you know, and when we out of here. You know, unfortunately, when we went to school, public school, junior high, high school, elementary, so on and so forth, and even college, man, we weren't investing in ourselves, man. Well, okay, fine, we were. But we were more invested in the public than anything.
Yeah.
You know what I mean? It's like the public education, there's more benefit for the public. You're going to get a job to work in the public. You know, that job is going to be for some sort of corporation or, you know, governmental entity. And, you know, really what it is to facilitate some sort of public commerce. It's not for your private family. It's not for your private estate. We go to school for many years to go and work for someone else's company, man. And that sucks, man. But we got to, like really peep that. That really needs to be understood. Most of us do not start our own businesses, man. How long did you go to school for someone else's company, man? Adults, you know, we get to this point where it's like, we ain't got to learn no more, man. I went to school for all them years, man. I graduated, man. Get out of here. We don't understand that, like, man, that was more investment in the public than it was in ourselves and our family anyways. And you're never too old to learn. It's like, only time you're trying to do something, you take a direction. So it's like the teacher, because you're going to get the grade, or your boss, because you don't want to get fired, you're trying to get the check. Other than that, man, it's like, what are we doing? So we need to continue to keep learning and understand that, you know, all that time that we invested in the schooling, it was overall for the benefit of the public and not for your family, the state, your family, corporation, or anything. You understand that to be like, well, I'm going to start a corporation and start putting some of that public education to the benefit of my corporation, whether it be a home-based business or whatever. Doesn't matter. Start allocating some of those, you know, human resources to something that's going to, you know, benefit your family. It makes sense to me. Yeah, you grown now, but going to work and then getting off work and then, you know, I can, you know, do my dance on the weekend with Bacardi or, you know, the Absolute or whatever it is, Hen Rock. You drinking that Hen Rock. It's not it, man. And we ain't leaving nothing for the next generation, which is ridiculous. That's how we getting left behind. Like, we got to invest in our private education. And we got to invest into public education and specific materials that are going to benefit the entities that we establish for our families and the benefit of our families. Set up shareholders that are maybe a private shareholder for the benefit of a family estate. And understand how to do that. But we're not going to do that unless we have the foundation. And, you know, that's what I'm here for, so L. That's what Sharif is here for, Sharif Ali. Yusuf L, and everyone here, at least on High Frequency Radio Network, man. And it's out of love and respect and trust and hope that, you know, tomorrow's going to be a better day, man. But we got to make it a better day. In order to make something, we got to work. And, yeah, we work hard. We worked a lot. Our ancestors worked a lot. But obviously the work ain't done yet. So let's get moving, right? HighFrequencyRadioNetwork.com. Like I said, a plethora of information. It's crazy out there.
So yeah, just
yes,
remind the audience about the event.
Yeah.
Well, everybody, just remember on the 25th of March, we're going to be having an event in Dallas, Texas. So we just want to, make sure we promote the event on both shows. As much time. We really want people. I know we have people that might listen to one and might not have even heard the other. So we always want to just be branding and making it point to understand that, we are real. You will be able to touch us and shake our hand. We're not too OCD. But at the same time, we definitely want to, make sure that everybody's aware that March 25th, we're locking down some really good details for everyone. We are definitely looking to have a what we call a sellout event. The last event, we definitely had a good one, a great one. I don't need to brag. The lives that were affected in that meeting, we move forward, and that's why we're doing another one. And we're going to do another one. And we're going to do, like we say, one most likely every 3 months in some part of the United States. And that's what we're going to keep our people to is we told you all this was charity, and we're going to donate those 4 events to our people in the United States and make sure that we understand financial literacy, economics, and truly putting together the quote-unquote Pan-African movement where we are working cohesively as a business unit internationally, not just nationally, internationally. We're dealing in international trust. We're dealing in international charities. We're not playing games, brothers and sisters. Me and Stoke, I hear so many people say, "Oh, you stepped out into the public." How honorable is that? We stepped out into the public, so we have no problem with our confidence or anything towards what we do, and we want to make it a point to really just make sure that other brothers and sisters are up to speed, so we're not the only ones traveling around doing our thing and no one knows it. And I think this knowledge can breed a level of secrecy and quietness, but at the same time, there's strength in numbers. So there's strength in numbers, brothers and sisters, and the more of us that know this, because I can't be mad at you because you don't know this. But when you have been given the information and you don't act on it, that's when I can find out whose side are you on. So definitely check us out. Email us at hfrn.foundation@gmail.com. That is a way to inquire about tickets. It will be a paid event. The last one was a paid event. Individuals definitely will, and all you can do right now is just inquire about reserving your spot right now. So please, brothers and sisters, don't think lightly of this. We do these events. We want to do them every 3 months, but please don't think lightly of these events. We're going to have our mentor. We talked to our mentor earlier. It's going to be a great one for us to get him out and really get him in front of our audience, in front of people that have never even heard about it. But his clients are very much so well-to-do. So I can put him in front of a different group of people and show him how hungry our people are for it. Because just to let you all know, our mentor is a brother. And that's the fact. And his mentor for this information was a brother. So when people, want to find out, wow, you guys are pretty locked in with, quality individuals. Yes, we are. And it's not to say we couldn't have learned it from another culture, but particularly with the trust knowledge, I and so have been mentored for years from a brother on how to administer trust. So, you all can rest assured you're not going to come in there and be bored. You know, our mentor is someone that you can relate to when it comes to our people. You're someone that you can relate to and really say, wow, you know, wow. And it's not a wow to be impressed. It is a wow to say, we have some brothers that, wow, we're that good. And for that reason, we need to partner up and not be cheap, not act broke. It's a wealth consciousness. You got to go, what they say, you got to get rich or die trying. So you got to do your best to get rich or die broke. You know, get rich or die broke. You know, so peace and blessings to everybody that is tuned into this episode. And thank you all for supporting High Frequency Radio Network, the Foundation, the Vault. We both come on at 8 p.m. Eastern Standard Time and 5 p.m. Pacific Standard Time. And, you know, we just always want to say thank you all and continue to share the show. Shout out to everybody on Facebook that listens to both of the shows. I know we got a lot of people that listen from social media. And we're going to continue to bring this to you all. You all, brothers and sisters, please don't think that we are looking to make millions of dollars off of any of you all. That is not the reason why we are out here. Once again, this is for charitable purposes. These events are going towards charity. These things are for the education and upliftment and cultural preservation of our people. It's that simple. Sharif Ali does not need to get rich off his people in that manner to educate them. You know, I was already intending to educate our people. But at the same time, we have to speed up the progress of this information, and we can't have people out here talking against our theories and our thought process. We have to put out a righteous piece of information, grabbing hard assets, and knowing a sense of urgency right now, brothers and sisters. There's a sense of urgency right now behind it. So, you know, not to take over the length of time that we have passed on this particular episode, but I appreciate you all for listening. But we have to understand that our unity is a trillion times stronger than our differences. Will ever be. You know, peace and blessings, brothers and sisters. Peace to the God. So thanks, brother. Great show, man, as usual, man. You guys got a unique brother here. Y'all, we'll see y'all get to shake his hands. Y'all, the ones that shook his hands, no. But the brother is real. I mean, the brother is silly, man. Just a good brother, man. You know, great guy to be around. And we look forward to building with you all in this realm. You all deserve greatness, so you have to be around greatness. And so does definitely one of the greats, because he's honoring his foremothers and forefathers and his ancestors. I mean, the brother is a living, walking preservation of historical preservation of his ancestors, paying homage to his ancestors. That's what we're here for. We're here to pay homage to those ancestors. They didn't come over here in vain. We came over here to make a comeback on the come up.
Like that. Appreciate it, man. You know what I'm saying? Oh, shucks. Might as well, man. 757-6601. Peace. What's your name? Where you calling from? 757-6601. How you going to push one and not even... I still love you, though. Welcome to thevault.com. Go sign up for the email list, man. You know, I'm going to get heavier in that. Stay safe. Stay aware. I'm playing games. We out here, and you should be out here, too. Shout out to Big Brother Yusuf. Peace to you, Sharif, man. I appreciate, the kind words, man. Everybody who rocked with us this whole time. You can catch us next week, Tuesday and Wednesday. This is how we get down. What is it? 8 p.m. Eastern, 5 p.m. Pacific. So, yeah, I just appreciate everyone coming in, everyone showing up. This is the Foundation Commerciavelli series. Check us out next week. Appreciate you. Appreciate you.
We're going to sing all the way live. High Frequency Radio.